Governor Sanjay Malhotra, in his very first monetary policy review, leaped to the finish line to announce a 25 bps repo rate cut to 6.25%, the first such reduction in about 5 years. The last time the rates were cut was in May 2020. With import duty cuts and rebates in personal income tax announced in the central budget last week, household consumption is all set to get a double-barreled boost. So what is the repo rate and how does it affect the common man? Hello and welcome to the New Indian Express. The repo rate or repurchase agreement rate is the interest rate at which the RBI lends money to commercial banks. RBI is the lender of the last resort and commercial banks often approach the RBI in need of funds. Why is there a need for a rate cut? It is part of RBI's intervention in the money market to control inflation or deflation. It helps control money circulation and the availability of money in the market. Who does this? Monetary Policy Committee of the RBI. The committee meets once in every 3 months. The committee has 6 members, 3 from the RBI, 3 from the central government. It is chaired by the RBI governor. Impact on the common man. The interest on retail loans like home loans, personal loans, vehicle loans, etc. from commercial banks is changed according to this rate, correspondingly to the cut or hike. So a decrease may eventually translate into a reduction of the interest rates on loans offered by commercial banks. It can also impact the economy's sluggish growth and encourage the public to borrow and spend. Another term that was brought up in the announcement was inflation. What is inflation? When consumer prices are higher beyond a point, the value of money depreciates. This is a situation that you need to pay more money for an earlier cheaper product, and this leads to inflation. This is mainly because there is more money available in the hands of banks and people. Then RBI intervenes and hikes the rates. When RBI feels that there is less money in circulation and consumer spending is down, the RBI intervenes and cuts the rates. When do banks pass the rate cuts to customers and the general public? Well, it depends in a competitive market like India. It gets passed on to the customer immediately if there's a rate hike. Rate cut is also passed on to customers without much delay. But today, as many people go for floating rates when they take a loan, they need to give a request to the banks for a rate reduction. The central bank also forecasted inflation for financial year 2025 at 4.8% and for financial year 2026 at 4.2% in line with the target of keeping inflation under control. As for growth, considering the looming global uncertainties, the RBI anticipates financial year 2026 growth to remain moderate at 6.7%, which is in line with the estimates provided by the economic survey.